Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report, where I will show you what's going on the market. I will tell you about the best trading setups and what happened on the market from the fundamental point of view. And actually, that was a busy day and busy day ahead of us as well, because we are in the middle of important ECB decisions. We are after the interest rate decision, and we're ahead of the press conference, which will start in half an hour or so at the end of our daily analytical report. Let me show the calendar because I'm sorry, because ECB is not the only thing that is happening today. Actually, ECB is the second central bank for today. As you can see, we got interest rate decision from Bank of Japan. Interest rate remained unchanged. Also, on the calendar, you can see that we got data from the about employment in Australia, which came slightly worse than expected. Australian dollar is going down a little bit, but it's mostly, well, it's a combination of two factors. So this data, but also a strength of American dollar, which is undergoing a correction right now. So on the market, on most pairs, American dollar is stronger, so we shouldn't be surprised that on this pair as well, especially that we are supported by this, influenced by this data about employment change. As for the calendar, you can see that we also got important news from Great Britain, retail sales, which is usually important and respected by traders. Retail sales came better than expected, but it failed to help cable. It failed to help sterling, and cable is going down again, influenced by the stronger dollar, which is a current trend at the moment. Well, a short-term trend, which started actually yesterday. And also we have to remember that British pound is under the influence of the data from Monday. Retail price index, consumer price index CPI, so inflation, which came lower than expected, and that caused reversal on British pound. What are we waiting for is 26 minutes. We'll have Mario Draghi speaking. The fact that the rates remained unchanged was expected, but everybody's waiting for the press conference from ECB. I think that Mario Draghi will try not to spook the markets, right? On the markets, we do have MSCI World Index, which groups world indexes, right? Is having a 10th consecutive day of an upswing, so 10 days in a row. This index is climbing higher, and we are on all-time highs. And Mario Draghi will try not to break that. I think will try not to disappoint stock traders. So the fact is that everybody's waiting for Mario Draghi, but I don't think that he's gonna tell something maybe amazing, but he won't bring in a game changer on the market today. At least he shouldn't, in my opinion. As for the calendar, Yesterday also we got important data for the oil traders. EIA crude oil stock exchange, and as you can see we got a draw bigger than expected, minus 4 millions, 4.7, which supported the price of oil, and oil went higher, actually triggering a midterm buy signal, but I will show you that in a second. Actually, we can go to the charts right now, and if I was telling you about oil, let's go to the oil chart and to the indexes. This is oil WTI, and you can see that this beta data from yesterday helped to break the midterm resistance. It's a 50% retracement of the recent downswing, but in the same time it's also a neckline of the inverse head and shoulder formation here, left shoulder, head, and the right shoulder. And price oil traders were waiting for this data. As you can see here, ahead of this data there was a sideways trend. They bounced from the resistance but stayed relatively high, putting pressure on this level, and finally, as we were warning and we were expecting that yesterday, that traders are waiting for a trigger, and this trigger happened, and the price is climbing higher, and actually breakout of the 50% here, of the 50% Fibonacci and the neckline, actually triggers a buy signal according to this inverse head and shoulder formation. We are on the highest levels since the 7th of June, and the closest aim, the target for this movement is here. It's the downtrend line which connects the lows from April and from May, and the price should get there. In my opinion, the price should get there. There's it shouldn't be a problem for them to get there. Everything is ready for this. They don't have major resistances ahead of them. Well, maybe just 61.8, but at the same time, this is a dynamic resistance, so they can, for example, go like that here, right? And they will touch the downtrend line, but at the same time they won't break this resistance. That would be an interesting situation here, and if there would be a nice bearish setup here, reversal pattern like head and shoulder, smaller head and shoulder, or a shooting star, or a bearish engulfing, that would be an interesting trading setup here. Next instrument which I have for you is DAX, which bounced again from this horizontal support on 12,300. Well, it's area around 12,350. As you can see, we bounced slightly above. That keeps a bullish dream alive, and that keeps this scenario of the wedge alive. As we said, we are in the middle of correction, so it can go both ways. Breakout of the upper line of the wedge will trigger a buy signal. Breakout of the horizontal support here will trigger a sell signal. As for trading, well, again, you have to remember that you're traders and you don't care actually which side it will go, because you can go both ways. You can trade it both ways. You can as easily sell as buy, so you shouldn't stick to any option. You should just wait for the breakout and trade what was there. That's what I learned during all those years of trading. Not to stick to one view, but have an open mind and wait just for the price to show you what the price wants to do, right? And trade that. Simple as that. So on DAX, we are waiting for a signal. S&P 500 all-time highs again. Not a surprise. Yesterday we got a huge upswing here. It helped us to create a midterm support. We have another one, we have another one, we have loads of supports here. Even if this one will be broken, nothing will happen. If this one will be broken, nothing will happen. This one as well. The gray one is important here for the midterm situation. As long, well, it's beautiful upswing, beautiful uptrend. Okay, now we can move to the forex market. And let me show you the cable, which is going down, but that's a potentially good support here. Why is that? We do have 38.2 Fibonacci level, we do have uptrend line, we do have a potential correction equality pattern, which is not always working, but it's at the same time it's nice to see that from time to time that the price is respecting that correction equality pattern. Sometimes it happens, and when it happens on a crossing of important supports, it can increase the chances for a reversal. So cable, in my opinion, is approaching an important level where we can expect the price to bounce. Especially that you can see that this level was support here, here, here. After the breakout, it was resistance, support again. So you can see that this level played an important role in the past few days. So here, not this, well, this one, if arrow down, if this support will be broken, but arrow up, if you have a bullish price action here, that will be a nice buy signal. Euro dollar, similar situation, because what we do have here is uptrend line, this green one, and a potential correction equality pattern and a horizontal support here. So this area marked with, let me change the color for yellow, maybe it will differ. This area here looks like a good support, but well, trading euro 16 minutes ahead of ECB press conference is risky. Simple as that. In my trading, I try to limit risk as much as possible, so I'm not touching instruments if I have important data for that instruments, if I have important data coming this day. I just try to be as technical as possible. I don't need fundamentals to interfere with my system, with my strategy, with my setup, with my outlook. I know that many traders like it because obviously ECB press conference will increase the volatility on the euro. I totally understand that many traders love this thrill, this emotion which is associated with that, and they like to trade interest rate decisions and press conferences, but it's a lottery. And in a lottery you cannot, in this kind of lottery, you cannot limit the risk. There always will be risk which will be higher than normally. And my job as a trader is to limit risk as much as possible. Right? That's what I'm focusing on. So if there was no ECB, I would look for a buy position here. As we do have a press conference today, I'm not touching this instrument. Global correction of American dollar can be also seen here. Here is a bit muted because of the stronger oil, which is obviously supporting Canadian dollar. But in those two instruments, you could see strength of American dollar in the past few days. Here also the strength can be seen in one aspect, because there was a channel down formation here. Second contact, third, fourth, fifth. So that's a legitimate resistance. And you can see that traders are trying to break the upper line of this resistance. If they will succeed, it will open a way here, 100 pips higher. It will open a way for them to touch the dynamic resistance, which is connecting recent lower lows from the end of June. But as you can see, higher oil prices do not help here with this correction. So even despite the fact that American dollar is a bit weaker, is a bit stronger recently on this pair, this movement is muted by stronger Canadian dollar, influenced by the higher oil prices. Here you can see that what I'm talking about from the beginning of this webinar. So correction of American dollar. American dollar is finally getting strength. Most probably we do have a divergence here. I wouldn't be surprised if we had a divergence of indicators. Let me show you, for example, MACD. Yes, we do have that can be considered as a triple bottom formation. Okay, I'm not a fan of that totally, but maybe some of you like that, and I have to admit that there is a triple bottom formation with a divergence of MACD, which by many books, many traders which are using oscillators, can be considered as a strong buy signal, especially that we're bouncing from a horizontal support here. What happened is, well, our scenario was made, so the price broke the lower line of the flag and tested those lows. That's what we were expecting, that's what we are writing about and telling about. What happens next? Can be an upswing, why not? There is a potential for that. Australian dollar to American dollar retracement, as you can see, affected by, influenced by data from the Australia, and also by the global strength of American dollar. Obviously short-term strength, because we cannot say anything about the strength of American dollar in general if for the past few weeks American dollar is very, very weak. What the sellers will fight here for will be a bearish engulfing, right? They need, for bearish engulfing, what they need is to close this candle below the opening of this one, so somewhere here. Once it will happen, that will create a bearish engulfing pattern on a candlestick chart, on a daily candlestick chart, and this can be promising sign for sellers here. American dollar to Mexican peso, also you can see a beginning of a correction, second day. It's nothing dangerous, obviously. The correction can go here or to the green line, and it won't definitely won't break the bearish spirit. They are very happy recently, and they can use it just to take profits or to open new positions with better prices. Let me show you the calendar. 10 minutes to the press conference. Obviously it will take time, so it won't be like that we're gonna have a huge movement in 10 minutes. It will take time. We won't see the market reaction on the daily analytical report, but you know that the press conference is happening, so you will be able to see that yourself. Gold, we can see a nice horizontal support here, helped today. What I can tell you is that we didn't get a significant bounce from 38.2 Fibonacci level, which actually is positive for gold and opens away to new highs, because that potentially was a strong resistance, but it didn't help the sellers. So we can see that the demand for gold increased. It's still low, but increased and can be promising. The same goes with silver. Situation is far from optimistic, but that's good for a start. And by that I mean this V-shaped retracement and come back above this horizontal support here. The closest resistance is the trend line, this one, and the horizontal resistance here. So we can see that here we do have a combination of three important resistances. If the price will get there, create a reversal pattern or candlestick or price pattern, that can be a very good sell signal. American dollar to Polish zloty also is retracing, but it's expected. American dollar to Japanese yen, also reversal is happening on a important support. We were expecting that. We were telling you about this head and shoulder formation here, and that there should be downswing, and downswing can stop here, and it's actually what happened. So if you follow our trading sniper videos or written analysis or daily analytical report, you are not surprised with the price action on the American dollar to Japanese yen. Euro to Japanese yen, no trading signal here, unfortunately. Maybe you can think about head and shoulder pattern here, left shoulder, head and right shoulder, but I've seen better patterns than this one, so I wouldn't bet a lot of money on it. Australian dollar to Japanese yen, here you can see on a daily chart, shooting star, bouncing from a horizontal resistance here. That's potentially an invitation for taking profit action for a correction. Okay. We are still very high. The correction can go here, for example, but it's not a strong signal either. New Zealand dollar to Japanese yen, large inverse head and shoulder formation, left shoulder, head and right shoulder. That's a horizontal resistance here, and a neckline at the same time. We were expecting that the price will stop here, and the price stopped here. What we are having is a very flat correction, which increases the chances for a bullish breakout here. Obviously, they need to make a correction after such a strong movement. Look, it's a daily chart. Since April, they went 760 pips higher. The correction is not even for 100 pips, I guess. Well, 150 pips. If we look at the Fibos, it's not even 23.6, so it's a very flat correction. The buying pressure here is high. So in the long term, we can expect that this neckline, that this horizontal resistance will be broken. British pound to Japanese yen. Here the better data from retail sales is not helping here either. As you can see, we are having the bounce from the long-term resistance which was first active in December 2016. Price is bouncing from this level. If this support will be broken, that will trigger a short-term sell signal. The potential target for this is the blue line. That's the lower line of the ascending triangle formation, and if this horizontal resistance support will be broken, that will open a way for a nice technical movement of 250 pips. And this is British pound to Japanese yen, a pair loved by traders because of the volatility, and probably many of traders see that support and will trade it. Australian dollar to Canadian dollar here. We had this comeback above the trend line, sell signal evaporated, but there is no strong trading signal for me here. American dollar to Chinese yuan. That's a long-term chart, that's a daily chart. I thought that the price will try to test this horizontal support here, like they did at the beginning of June, but the correction came earlier. The price is going up now on 23.6. My long-term scenario here on this instrument is an uptrend. I think that in the long term they should break the upper line of this flag, and they should go higher. Maybe they will try to touch this support first, but in the long term, I'm telling about a few months here, I think, or even a year, I think that the price can go much higher here. Remember guys, in 2 minutes we do have an ECB press conference. If you're just starting with the markets, it's a nice time for you to just sit and watch what's happening on the market, because we can expect a bigger volatility, and you will be able to gain experience in that by watching those events, and by watching the price, what the price is doing during those events. You gain great experience. Don't trade it, don't try to trade it, it's risky. You can open a position on a demo account, why not? But definitely it's the thing that you should be observing, and you should be on the market watching carefully, because it gives you a great experience, right? You will be able to see what sometimes happens on the market when there is an important macro event. Right, so remember, in 1 minute ECB press conference starts. We finish the daily analytical report now. Thank you very much for coming. Thank you very much for staying. Now half an hour break, and after that we'll have a webinar about technical analysis. I hope that you will all join that webinar with me. Thanks very much and goodbye.